Hey everyone, thanks for tuning in. So today we're doing a trade recap on our Sunday Asian market session. We caught 46 plus R in just 55 minutes. So we're going to break down. I'm going to go from a medium time frame, which I would consider, let's say, the 4 hour, downward, just to get an explanation of why I was looking for shorts during Asian session, why I did not wait for London, and how I took my entries, what they look like. You're going to get a breakdown of my thought process during the trading. We're going to do a lot of the markups fresh, just so that you can kind of see what I was looking at when I was taking a look at the charts. We're going to start with the 4 hour, right? So we're going to go over three entries, but first we're going to go from the 4 hour. We're going to break down price action, the reactions that we got, why we're looking short, the 1 hour, the 15 minute, and then we're going to go to the 1 minute. So let's get started. So last week, you can see that if you remember, if you watched the last videos, we had some aggressive reactions to this zone. We did catch a short from here, and this was a sweep that we basically caught of this 4 hour supply zone, right? Now, as you can see, we could have also expected that, hey, we kind of have some relatively equal highs here. So the sweep was pretty justified coming into this supply zone. Now, who's in control if we really think about this? Well, price did not just sweep into no man's land and then just pull back, right? It did not just break structure into no man's land, which would be, somewhere like this. What do we have? We have price very aggressively came to tap into a higher time frame or medium time frame, depending on how you look at it for this setup, a higher time frame supply zone. So what do we have? It's just another mitigation. So the idea here is, why did we have such a massive reaction here? Had we not seen this, we would have just been like, okay, so we got a sweep of the highs, we've broken structure to the upside, this was a massive sweep coming down, and we're probably just going to go long, right? So a lot of people probably could have thought of that, because if they were looking at this zone, then they would have just been wondering why they got swept. They would have been started thinking that, well, I guess we might have some bullish intentions here now. Maybe price is just, gathering some liquidity here to go long and, get a continuation. But the reality is that we have to really break down why price reacts to where that it does, especially when we get such aggressive reactions, right? You have to figure out who's in control. So in this case, we can see that what price did was very aggressively come into mitigation here, and it respected this level. It was heavily respected. And there was so much inflow of momentum here that you can see that we have a massive candle wick, and the body's kind of small, but this ran over 100, almost 150 pips on a 4 hour time frame, came here to sweep these lows. Hold on. Excuse me. Sorry, I had to pause for a second. I had to sneeze. So here we are. We had an aggressive reaction. So this tells us that there's something going on here that we're looking for, right? So we don't know about this zone, right? So we're still waiting to figure out what's happening on a lower time frame. So we're going to go to the 1 hour. Really quickly. So let's go to here. So here we are on the 1 hour. We'll do that after. So we're here on the hourly. Let's sketch this up a little bit. We have what looks like a very clean order block here on the 1 hour. This is a very cool point of interest that we're going to be looking to trade off of. We'll probably get some sort of reaction to this zone maybe later in the week. And the reason why is because if you see, we have such a massive buildup of liquidity up here that this is just waiting to be taken out, and maybe another continuation down. So ideally what I was looking for is hoping that price was going to come in here and tap on Sunday. As you can see, price had this new low. I was hoping that price was going to crawl itself up to here to get a nice short, but what happened was we didn't get that. So I'm going to show you how I ended up and why I ended up going short in this area, right? So anyways, if we're going to mark up our structure here, we had this high pull back, right, to this zone here. We have some equal lows, that's a sign of inducement. So we can definitely see this being taken out, right? And then what do we have? This low is responsible for price to come into this zone. This first wick here that we have here came in to mitigate the 4 hour very aggressively of a different point of interest that was just slightly below. We had equal highs just above that. So you can see what price did was it came down, reacted, and then came up to sweep that previous 4-hour point of interest and mitigated another 4-hour point of interest that we had. And this is where all the momentum came in. And what do we have? We take these equal lows and we swept them. We swept them clean. And I mean, could we classify this as a break of structure? Yes. In some cases you can. Obviously, these look like just wicks, and it has to fit your plan. Now, we did run 23 pips past that zone. So although we don't have a closure on the 1 hour, we have a massive wick. And so what that's just going to tell us is, well, we do have a closure below there, but it's just going to be on a different lower time frame. The current time frame doesn't show us that. So in the meantime, we're going to consider this some sort of break of structure on a lower time frame or a sweep on the higher time frame. It doesn't really matter. What it does show us is that we're not respecting the downside, and we were creating inducement to come down, right? So this was, very well targeted. That was a great trade to take. And I did take a trade from here, from a sweep in here on the 1 minute time frame on the previous video, but we're going to focus more on what we did on this Sunday, right? So here we are, point of interest 1. This is what I was looking for, to get tapped. But in the meantime, what are we looking for? We're looking to see what's price doing in here. If we break this down to make it very simple, we basically just have one low extreme and one high extreme, right? Because what we have now is we're not currently creating new market structure. Now, we're not making new highs and new lows necessarily, right? What we have is internal structure that's being created from a very aggressive move. So now what's happening is we're getting price moving in here, right? And so we don't know necessarily, is price going to break down, sweep, come up, or is it going to, just further break down? And so when we're having internal structure like this is a complex pullback, as you can say. I like to usually frame out the two zones. So this is my extreme from the highs and the lows. And what I'm basically looking for is, I'm looking for a chain to start forming, whether it's a supply chain or a demand chain. So what I'm looking here is, when it was Sunday open, I was looking to justify what kind of reaction could happen within here, because I don't want to miss days of trading just because we're ranging. There's tons of ways to make a lot of money during ranging markets. If you have a good setup and you really understand what price is doing on these lower time frames, you're going to be a lot safer, right? So anyways, we go from this low to this high, right? We get a pullback here. So I'm going to mark out this little level here. Let's mark it out in red so it's a little bit more clear, right? What do we get? Price comes up, makes a new high. So from this high, we're going to mark that out. What do we get? Price first pulls down, mitigates something in here, and then what happens? We get an explosion of price upward. It's a wick, fails to mitigate the hourly, but what does it come into? It comes into this pivot range, or this pivot supply that, on a different time frame, let's mark this light, on a different time frame is very relevant. So what are we doing? We're just, creating mitigations within here, but obviously this is the higher time frame point of interest that we're really looking for. This is too big of a zone, it's about 40 pips, a little bit, yeah, about 40 pips. So we're focused on not what's happening here, but what's happening at this 1 hour zone. So in the meantime, what do we know? All we know is that this wick broke structure to the downside. Now we don't have a candle closure, or we do. We have a candle closure just below the bodies here on this low, and we also have a wick that came in to sweep it. So what we're going to do, we're going to just see if we can build a story here, right? So what do we get? Here we get a supply chain potentially forming. And this one, what do we have next? We have this low. We're going to draw this all the way across, right? Now, remember, we're trading. I was trading Sunday, so for me, this was already on the chart, right? So this isn't. We're not hindsight figuring out what's going on, what went on necessarily. I mean, this was already here anyway. So this was from my markups from last week. We're just following the supply chain, right? What do we have? A mitigation of this wick with candle closures. And what do we have? Do we have any breaks? Let's see. we have a small break, a small wick below this low. This was the low that came into what? To mitigate this zone. So that's interesting, right? Let's see. This was the pull short, went up. So what do we have? This is breaking structure to the downside. Now it's very weak. We still have this. This is a lower time frame complex pullback, right? But we did mitigate this zone, and we created a small break of structure here. So for us, we're looking to see what's going to happen with this zone. Now these zones might be too big to trade off of. 20 plus pips. I only like to take 2 pip stop losses or so. So in the meantime, we're trying to build the story of why we are what we did on Sunday. So here we are. Now what do we get? Let's mark this structure here. We get a mitigation here, and we get a very aggressive reaction that what? Broke structure here and broke this structure here. So now we have this zone created 2 breaks, and also I guess this zone too was broken by this one. So anyways, this order block that we have here, that's an inside bar, was responsible for breaking 1-2 points of internal structure here. So we're going to mark out this zone. This is our next point of interest. And what do we get? Price comes into tap. Now it's a low mitigation. It did tap what? The bottom of the range and the bottom of the candle body on the hourly. Remember, we're still on the hourly. And what do we get? Let's try to mark these levels here. We have a low here. Remember, we're just trying to build our story, justify some reactions here. We get a break here. These are too small for me to pay attention to because obviously up until this point we had yet to mitigate any zone. Here we go. And this is the point at which it matters here. So this was the low that was responsible for creating what? The mitigation that resulted in a break of structure. So what do we have? This wick is now another point of interest in this supply chain that we can see now very clearly is forming, right? So this one has been mitigated. So we're going to put a check. And what do we get? This one was a mitigation. So this is how I took my trade on Sunday, off of this mitigated zone. So what happens now is, here's my thought process. We have 1, 2, 3, 4 supply chains that have been confirmed. 1, 2, 3 of them, 4 of them have resulted in breaks of structure. And so what am I looking for? I'm looking for another break in structure. This is my target right here. This is what I'm looking for to be tapped, right? Now this might be a little too low for me right now, but let's go on a lower time frame to see what's going on. So here we are on the 15. You can see this was a supply chain. Price came in to mitigate what? How far are we in here? A little bit above the 50%. Perfect. Let's go on a smaller time frame here. Go to 5. We're taking a peek here to see what's going on. All right, perfect. Now I see what we're looking for. All right. We're going to go to the 1 minute really quick. Okay. We're going to stick to the 5 for this part. So what do we have here? We have this low extreme. Let's mark it out a little bit here. We're going to go from this low. On this again. We have this high. And what are we expecting? A new low, right? Now, we have to remember that we are going to get reactions. And this line right here, this is the weekend separator. So this is basically from this candle is when we officially get our open for Sunday open for the Asian session. So you can see this is what the Asian session traded like. Now I'm going to show you how I got the trades that I got, right? Now, if you remember, on the way up, what do we have? We have extremes and we have decisionals that are going to give us the reactions, whether we're looking for those or not. One thing that we're going to have to pay attention to is remember that London oftentimes wants to sweep the Asian high or the Asian low, whichever one has been unmitigated. So in this case, we are cautious, understanding that anything in here that we react to later during the day could create some sort of impulse that could liquidate our positions. And that's why we have to be very cautious with our targets, right? So if we break this down, let's take a look at when we broke structure here, right? So price came down, this was a low, and these are very small, right? This is on a 5-minute time frame. This created a new low. This was the high. What do we get here? This was our change of character. Price pulled back down from here and then took off. So what I'm looking for is, I'm looking for price to come into where? This looks like a good point of interest to have, a potential target. This could be one. So we're going to mark that as a demand zone. And then what else do we have? Price continued, very impulsive. We paused here, created a lower time frame accumulation, and what do we have? A breakout. And this breakout was responsible for breaking this point of structure, which is another zone that was responsible for this push down that liquidated this zone. So you can see here that this low was taken out by what? By this. So it looks like we have a lower time frame flip. So here, let's frame this out. Here we have a supply zone. Price came in, reacted, pulled back. We have a lot of equal lows here. That's buildup of liquidity on a lower time frame. What do we get? A final push up, and that's when price just takes off and continues. We mitigate up here, and therefore on Sunday when the price opens up here, what are we looking for? We're looking for mitigations to take price lower, right? In this case, what do we have? We have this point of interest, which is decisional, that was very well respected. Here you can see that what? This low was taken out by this wick, which was what? From a buildup of liquidity that happened on the lower time frame here. That came down to break structure. So we're going to mark out every time we broke structure here. So I can show you how I took these entries. On the 5-minute, that's all that we have right now. We're going to go down to 1 minute. Okay. And this is where I executed my trades. So to kind of, before we go into the actual trades themselves, remember, what do we have? We had a 4-hour mitigation of a supply zone. We got an aggressive reaction showing us bearish intentions. Expected order flow is going to be bearish, right? We have an untapped 1 hour, an unmitigated 1 hour supply zone that we definitely are waiting to get tapped, right? But what do we have to do more than likely? We see that we are creating a supply chain on the 1 hour, and that it's very well respected. It's continuously breaking structure. Each one of these are breaks and structures. And then what do we get when we go to a lower time frame? We get that the last mitigation of the week that occurred on Friday has pushed price down. We see a decisional that had been tapped the moment that the session opened. We got an aggressive reaction to the downside that broke structure on the lower time frame from here to here, right? So that's showing us bearish intentions. We mitigated this zone, so this now looks like a flip, right? So from here to here, this is a flip zone, a demand flip, because what do we get? We have this short that was responsible, this decisional zone that was responsible for this break. Price here aggressively creates a demand, has an explosive engulfing candle, has yet to mitigate this 5-minute order block. Price is kind of just building up liquidity. What do we get? Market open, mitigates about the 25% of this order block, aggressively pushes down, and what? Reacts to this 5-minute demand zone that created this mitigation. So what do we have? From here to here, we have this reaction. Price pushes down, taps the demand zone. What does it do? Comes back up, and it doesn't break out. Had it broken out from here, we would have been looking for an entry to go long. But what it did is it respected this decisional order block. And what do we get? We eventually get breaks that break this zone, and show us that this was a great flip trade that we could have taken. And the flip here, a good entry would have been from here. Once this broke down here, you could have got the mitigation here. And so I'm going to show you the trades that I took. Let's turn these on. So the entries are refined entries. So let's go to the 1 minute. I'm going to show you what I'm doing here. So on the 5 minute, we just mitigated this demand zone. You can see we have massive wicks. So for many people, that might make you feel uncomfortable because when we have massive wicks like this, there's a ton of stuff happening in here. And I was actually expecting price to come in to mitigate something in here. And once we broke down and we broke this level of internal structure, and we swept the reaction. So while this one, let's frame this out here. This level came down, this made the low that came in to tap into this zone. We mitigated this demand, price came out, took this high, so therefore what? If we were going to go long, this low should have been respected. But instead, what do we get? We get a sweep of that level. We break structure to the downside. We've now come into this 1 minute small order block that we are unlikely to respect. Because we have a higher time frame supply chain building on the 1 hour, we are just going to follow the mitigations to go short, right? So here, see, we have this massive zone here. All I'm looking for is a reason to go short. And so my first trade, I wanted to get something in here. Now the problem was there's so much potential upside, and so I would be unsafe to be able to take any trade here. 6 pip stop loss. I take 2 pip stop losses, 1 pip stop losses. That was too big. And at the same time, what do we get? We didn't break any structure in here with this reaction for me to think that this position was relevant yet, right? It was not yet to my liking. And then what do we get? We have this decisional zone that gave us a good reaction finally. And what do we have? A reaction. Let's make this a little bigger because I know that these candles are really small in the 1 minute. What do we get here? This was an accumulation that gave us what? We got some sort of reaction here. Price came in to tap, and what do we get? We have this wick up that gave us a reaction potential flip zone, right? This was a demand zone. Price came in, reacted, formed its extreme, and what? Broke this level, broke the flip. So here we are. This was a demand flip. So remember, when we trade off of flips, basically what we're looking for is we're looking for a reaction to the point of interest, which you can see on a lower time frame is right here on a 1 minute. So what did we do? We reacted here. Price came up impulsively with some momentum, came in to wick out some levels that were in here, but still kind of respected this demand zone here, this flip. So all we have here is we have this that could be the source for the break in this this demand zone. And what do we get? Exactly that. And that was my signal to enter this flip. That was super clean. So what happens is this wick now gave me the push down, and now I'm looking for an entry here. This would be entry 1. Now I did not get to take this one. Price moved pretty quickly, and I was still a little hesitant to take a trade, but this would have been an amazing entry to catch this massive trade. Would have been much bigger than my other positions. But what did we have? Price came down, pushed up. We did get a mitigation here, and then price sold off, and what? We broke structure. Broke several points of structure. We broke this one, and then we broke the 5 minute extreme of this flip. This was another flip, remember? So here, I am now looking for trades. So here I will take a trade, and this is entry 1. And I enter at 25% because this is a pretty small zone. And so my stop loss here was about half a pip. So that was a very tight zone. And sometimes you can get away with taking trades like this. It's always good if you push it a little bit, extend it to cover the highs. But the reality here is we got um, a very high confirmation that we were going to continue bearish with this flip, this impulse push up that left a wick, and we mitigated that zone and got an aggressive reaction that broke 2 points of structure. So this was entry 1, and then what do we get? We have another flip from here to here. Hold on. There we go. This was another demand flip. We're going to explain why, right? So what do we get? We have these points. We have 1, 2, 3 points that we came up here, relatively equal highs. I mean, the reality is this one did take out, but we have this point and this point of untapped structure. And what did we do? Price made this demand. This was the extreme that what? Also swept these lows. So we got double sweeps. So we liquidated this range. Price then pushed up, liquidated the highs of this range. And then what do we get? A mitigation. That was our entry. So this was just a buildup of liquidity, a buildup of inducement for us to further take this short. And this push down that swept these lows was just another way for it to gather enough liquidity to make this push up and then come back down. So then what do we have? We have a reaction to this demand zone that created a mitigation. And then what do we have? This was the point at which price came up and flipped. This was now the point of failure that caused the break of what? Of this demand zone. So we have demand failure. Therefore, what are we looking for? We're looking for another entry here. Once again, we take this trade at 25%. This was a 0.8 pip stop loss. It was very tight stop loss. And once again, this is a flip. So this is kind of like a new chain forming. So this is a pretty safe trade to take. It's unlikely that price will surpass this because we've already mitigated this previous zone, and this flip is just confirming this trade. Now we did have, how quick after this broke, we had 1, 2, 3 minutes to be able to get an entry. And so when you're trading the lower time frame, you have to be able to be quick. You can't have any hesitations. And when price is giving you its clean setups like this, when you're sitting on the charts and you're watching and you're seeing flips and change of characters forming through continuations, you know, those are going to be really good signals for you to take. So we took another entry here. And then let's see, we're going back down. We're continuing. What do we have? We have price here could have created, this was another flip, right? So we have this low, created mitigation. Let's see, you know, not the cleanest necessarily, but what do we get? Price comes in, taps here, pushes up, still respects the top of this zone because what? We don't need to go long. We've already mitigated. And then what do we get the failure from? That's, let's see, demand flip. This is the point of failure. And so that would have been a potential good entry, except price did not come back to the zone, which is why we don't have a trade here. But this would have been another good trade. That was a good flip. Price comes down, makes this low. What do we get? A push up. Price comes in to mitigate something in here. Did I take a trade here? Don't think so. Obviously not, because price didn't come back into the zone. So this was another potential good setup because what? This was the, you can see that there was an aggressive push up here, that we have an inside bar. Usually when we have a buildup of liquidity in here, a lot of times price comes in to mitigate these zones, the inside bars, the red one. And when price came down, what do we have? Break in structure. So we broke the lows here. So that could have been a good entry, but price did not come back to that zone. Therefore, we had no entry there. So at this point, we're just looking for continuations till we get to our higher time frame point of interest. Price comes down, takes this low. What do we get? A sweep. This one took out 1, 2 candles on the 1 minute. And what do we get? An aggressive reaction downward, breaking structure here. What do we have? We're now looking for what? A mitigation of this zone, an entry here. And from here, we're taking price short to break this structure. So this was another entry that we got. This one we took because we had a pretty big size, what do you call it? Pretty big size wick on the 1 minute. I entered at the 50% to kind of keep that safe. So you can see price came in, just ran a little bit further than that, but we still respected this level. And what do we get? Another clean break of structure to the downside. And where's our target? Our target was, I don't even remember what our original target was, right here. If we go to the left, remember we had a flip here, right? So while we could frame out this entire zone here as a potential demand zone, it's easier just to nail it down to what? To something within here that reacted. So here we have this, what do we have? This was a supply zone on the lower time frame. We've technically made equal lows, but you can still see that we have some candle closures below this zone. So, let's see. You can see that here we had a push down, failure to make new lows. We could consider this maybe inside here somewhere on a seconds time frame. There must be some sort of supply. Price mitigates that supply, pushes down. We get a pretty small candle here that's closed short just before price exploded up. And therefore, I was looking to take profit to be safe from here to here within this zone. Now, for me, that was the safest. Now, of course, we knew that price would have to come down to unmitigated zones down here. And this would have been a pretty good place to take profit. But because we're trading Asian session and we're already getting a pretty aggressive push down, at any moment, price could react to this zone and simply just take off, right? And it could come up and, we might not see this until another session. And because I have such small stops, half pip stops, price can very easily liquidate all this area. This is very corrective buildup of liquidity here that, as you can see, very easily could be taken out by a 15-minute point of interest. So this isn't necessarily the cleanest way to trade, and that's why you have to be strict with your take profits here. So now let's click on, now that we've justified the reactions, this was our take profit zone. Let's show the actual entries that we took. There we go. And so just as you can see how we ran through price from the 4-hour to the 1-hour to the 15-minute to the 1-minute, and I showed you my justifications for every reaction that we had. We justified the 4-hour sweep. We justified, what else? All these different flips that we got within price. Each one of these flips created a potential entry for us. Now, we only took the entries that we got where we mitigated them because some price just didn't come back. Price didn't come back to those zones. Therefore, we had no potential entries there. But as you can see, you don't always have to have massive stops. You don't always have to have massive trades. This was a range of what? From here to here, my target was about 13 pips. Imagine catching 46R on just 13 pips of a very clean structure. All we were doing was following the 1-hour supply chain that was forming, looking for further breaks in structure. Now, instead of targeting all the way down to the 1-hour, what we were doing was we're targeting a 5-minute point of interest to show you once again what it looked like. This one. Look at this inside bar here. A 5-minute point of interest. We narrowed it down to the 1 minute and refined it. Very clean. Price, of course, ran past that and continued short. But we are happy that we were able to catch massive opportunities during this zone. We didn't have to do any crazy risky trading. These were all very clean setups, flips, just more confirmations and more re-entries to the original position that we had. So I hope this lesson was good. I hope you learned a lot about this on how I trade the 1 minute time frame. Here we just further went in depth on how I justify reactions and how I look for entries, where I set my stop losses and my take profits. And hopefully you learn from this video, and along with the other videos that I've made, that you can maybe apply some of these lessons into your trading plan. So thanks, stay tuned for the next video, and I hope you enjoyed this one.